So, right now, if you got Bruce is a guy who wears sunglasses. That's just who he is, man. Okay, if you got Bruce over there, right now, he is freaking out about inflation because his wallet is empty. And so Bruce is going to be living a life with his hands up to the sky, wondering what the heck happened. And that is exactly why Bruce is saying, let's go, Brandon. Alrighty, folks, today we are going to explain why inflation is out of control here in the United States. We're going to break it down along 3 axes. We're going to talk about supply chain problems. We're going to talk about government spending, and we're going to talk about monetary inflation via the Federal Reserve. This video is brought to you by our friends over at Birch Gold. By the way, this video is a pretty good reason why you might want to invest at least a little bit into precious metals. Okay, so why don't we begin with Joe Biden's big excuse, that is the supply chain. When the pandemic happened, factories everywhere shut down. It is much easier to shut down a factory, as it turns out, than to spin it back up. And the supply chains across the world are extraordinarily integrated in a way that they weren't for most of human history. So, for example, according to some surveys in 2019, nearly 100% of major companies said that they had some part of their supply chain located in China. Well, China had all of these jobs shipped over there, right, all the way over here, because they have very few labor regulations, because they have slave labor in some cases, they have no environmental regulations. So if you're going to create dye, for example, and then just dump the toxic waste into a river, you ain't gonna do that in Europe, you're not gonna do that in the United States. Wealthy nations can afford to care about the environment. China doesn't care, so China just pollutes up the wazoo. That means that if you're going to produce a manufactured good, then you are generally going to be doing that in China. If you're gonna be doing innovation, if you're gonna be doing service industry stuff, you're gonna be doing that in the West. And as the supply chain starts to become longer and longer in order to account for the differences between labor supplies in different countries, you start to see massive integration between countries. Well, when something shuts down in China, that means that it's going to have an impact on whatever is the next factory that requires the input. There's a very famous essay called I, Pencil, came out in 1985, all about how a pencil is created. They take the most simple object that you know of and think about how many different countries this thing has had to go through in order to get to you. When you have a pencil, you have the little eraser. Where does the rubber come from? And you have the little metal piece. Where does that come from? You have the wood. Where is that coming from? You have the paint on the outside. Where's that coming from? You got the lead. Where's that coming from? Well, now take complex product like a car, and you're talking about maybe half a dozen or a dozen countries that the various parts have to come from in order to manufacture that. Well, you shut down not one factory, but many factories all at the same time because of COVID. It's gonna be very difficult to spin that back up. So you're gonna see a real shock in terms of the supply that is available to deal with the demand. Now, when the pandemic hit, what people were mostly concerned about is that demand would completely disappear and you get a worldwide depression because people just would not buy anything ever again. Nobody had a job, nobody had any money, nobody knew exactly what to do, and nothing like this had really happened in modern history before, certainly not on a global scale the way that this did. And you combine that with the long tail of regulations that have existed in the West with, for example, the ports. So in the United States, the unions in the United States have bargained, particularly on the West Coast, to shut down the ports for certain numbers of hours per day. You have real problems with how containers fit on ships and what sort of containers fit on trucks and what happens if they can't fit into the ports properly. And so what you end up with is at every place in the supply chain, real delays. Let's say that you have a factory in China and it is manufacturing a product and it has to make its way around over to India where it's used as an input. And now it's gonna get shipped to Brazil for another input. And then that is gonna get shipped over to, say, the East Coast of the United States, where it then has to travel across the country. If at every point here you have a delay, you're gonna end up with a really, really big delay. One of the big shortages that's occurred here is in semiconductors, because it's difficult to produce semiconductors, because the technological innovation that is associated with semiconductors is largely in Eastern Asia. 92% of all advanced semiconductors are produced in Taiwan. Another 6% are produced over in South Korea. And when you have a shortage in semiconductors, that means that new cars become incredibly expensive. This is why no one can get a new car now. This is why used cars are pricing above new cars. So the problems of supply chains are very, very real. And to pretend they're not is, of course, very silly. To also pretend, as Joe Biden did, that he can just get the ports working 24 hours a day and that fixes it, obviously is not going to do it. But if this were just a supply chain issue, then again, it would apply to Europe the same as it's applying to the United States. And it doesn't. Which brings us to issue number 2. How the United States decided to spend during this pandemic. And the answer is we spent more money than anyone has ever seen in the history of humanity. If you draw a chart of the national debt of the United States, here is what it's going to look like. Okay, then 2021 happens, the pandemic. And our national debt is now off the chart. It's gone. Okay, so in the past year and a half, we added about $7 trillion to the national debt. From 2020 to 2021, we added $7 trillion to the national debt. We spent more money than has ever been seen by God or man. The idea was that the federal government was going to pay everybody to stay home. They were going to pay them hundreds of dollars per week to stay home. That lasted all the way from March 2020 all the way until September of 2021. These extended unemployment benefits, for example. What did this do? It told people, why don't you just stay home? People did. People who were working took the money and they pocketed it. By the end of the pandemic, people had more money in the bank, more wealth in the bank than they had at the beginning of the pandemic, while many of them were not working. We also suspended mortgages. We suspended rents. We did all of these things. We blew out the spending in extraordinary ways. We did all of this while producing no product. So it was helicopter money. We just dropped money on millions and hundreds of millions of people, while simultaneously putting small businesses out of business by telling people they couldn't go to a restaurant. They couldn't go to a small mom and pop store. You could go to a big chain store because after all, you had to shop, but you couldn't go to like a small mom and pop store. So all those places went out of business, but here's a check to compensate you for your trouble. So what are you doing? That's much more money chasing much less product. What does that do? That creates inflation. So that's factor number 2, which is how much money the government spent. This also means that if Bruce is looking at future inflation, and Bruce is also looking for maybe just a little bit of that hard asset that has never been worth zero, gold, from our good friends over at Birch. One way that people have historically protected against the predations of the market and inflation has been precious metals. 40 years ago, Ronald Reagan saw massive inflation unlike anything the country had seen before. That's super high inflation. We're talking like 10%, 15%, 20% inflation. And now, in Reagan's own words, inflation is as violent as a mugger, as frightening as an armed robber, as deadly as a hitman. Right now, your retirement accounts are under attack thanks to the inflationary policies of this administration. So, if you haven't yet called Birch Gold, I'm asking you, why not? Those are the people I trust to help you diversify your 401k and IRA into gold. Birch Gold has your life vest against the rising waters. Let them help you convert an IRA or 401k into a tax-sheltered IRA in gold. With thousands of satisfied customers and A+ rating with the Better Business Bureau, you can trust Birch Gold to protect your savings. Text Ben to 989898. Get a free information kit on gold today. And for a limited time, when you buy, Birch Gold will send you a signed copy of my brand new book, The Authoritarian Moment. Text Ben to 989898 to get your free information kit right now. Next, and finally, we get to the activity of the Federal Reserve under Jerome Powell and company. So these big boys come in and they decide, you know what? We need to not only temporarily backstop the economy, we need to just superheat the economy. So you understand at the very beginning that the Federal Reserve, which had not experienced, as we say, serious inflation in the United States for 40 years, the idea of inflation had become sort of a thing of the past, so much so that there were people on the left who were suggesting that there was something called modern monetary theory. You could literally spend as much money as you could possibly want and it would do no damage. You would not get major inflation. You would never have to pay it off. It would be totally fine, right? This was an actual viable theory like 2 years ago. Elizabeth Warren was promoting it. Okay, now it becomes clear that we've got this over here. Okay, so what did Jerome Powell do? He made a mistake. He thought that if there was inflation, it would be temporary. Because after all, the demand that he had artificially created would eventually be met by the supply. And now that relied on a couple of things. One, it relied on actual solving of the supply chain problem, which we've discussed before. But also, it relied on the idea that things weren't being overvalued simply by the fact that there was so much money swimming around in the economy. Okay, so the basic idea here is that the lending rate to the banks was zero, right? It was free. It was free for the banks to lend each other money and for the banks to borrow money from the federal. All that was zero. Okay, so what that did is it led to an enormous amount of the bank taking out money and then investing in products that they wouldn't normally invest in. So for example, Carnival Cruises goes down, right? $6 billion. There's $6 billion on its stock price because the cruises are going to be shut down for a couple of years. And instead of Carnival going bankrupt, basically the Federal Reserve tells the banks, we will back your play. So the Federal Reserve starts buying up assets like never before in human history. The Federal Reserve is currently holding $9 trillion in assets. $9 trillion in assets. Okay, they do this by buying up all sorts of product from the bank and then injecting a bunch of money to the banks, which the banks then lend out at very low rates of interest. This spurs demand. It spurs investment. It means that you're going to get an inflated stock market bubble. You get an inflated real estate bubble. But Jerome Powell kept saying that the inflation was temporary. The supply chains would clear up. The overspending would eventually kind of work its way out in the market. It's sort of like a bump in a snake moving back toward the rear of the snake, and eventually everything would clear out. Well, the problem is that the combination of all of these factors, buying up $9 trillion in assets and sending all this cash into the system, which is then being distributed out to a business and being distributed out to a mortgage and being distributed out to an individual, right? All that money that's out there is then inflating all the pricing. So bottom line is, what you end up with is a three-factor disaster area that leads to long-lasting inflation. Factor number one, supply chain. Factor number two, overspending. Factor number three, the Fed. Okay, that combo is going to create superheated inflation, which is why you see it in the US, but you don't really see it as much over in Europe. So when Joe Biden says it's just the supply chain, that's not correct. It's overspending, it's the Fed. It's not just me saying this. It's former Obama administration Undersecretary of the Treasury, Stephen Ratner. Okay, it's Larry Summers. This is not merely a supply chain phenomenon. It is also overspending, it's also the Fed, which is why when Joe Biden says what we really, really need to do is spend more money, all he's doing is making this worse. When he says, what if we had the Fed continue to set the rates really, really low? All that is doing is making this worse. Now, to Jerome Powell's credit, and to the credit of the Federal Reserve, they're now trying to bring this down, right? They're going to try to divest themselves of those $9 trillion in assets. They're going to raise the overnight interest rates in order to ensure that less money goes into the system. They're going to try and suck money out of the system and put those assets back into the system. Okay, all of that is going to lower the phenomenon of monetary inflation. There's only one really big problem in the long run. Supply chains will iron themselves out, they will. There's one really big problem, and that one's this one. Okay, the fact is, that one ain't going away. That's not going away. As we suggested, when you have $30 trillion in national debt, that means the interest payments on the debt are going to comprise an enormous chunk of your budget in future years. It means you're gonna have to raise taxes. It means you're gonna have to pay people back somehow. Okay, how are you gonna do that? The answer is probably economic stagnation. That's what I am afraid of. I'm not as concerned about inflation being a long-lasting phenomenon. It'll get cleared up. Might take a year, might take 2 years. But in the end, what we did here is we completely reshaped the nature of the economy in the United States. We made ourselves way more dependent on the government. Not only did we make ourselves way more dependent on the government, we spent more money than has ever been spent in human history. We've set a new baseline on what kind of things we will spend money on. If that continues, you're going to see low growth from here out into the future. Okay, that's the real danger. So as inflation clears up, watch for stagnation to set in.